You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPKEX volatility products. SPKEX options and futures are traded on the SPKEX Volatility Index, SPKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPKEX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting, the ever compelling Options Insider Radio Network, upon which so many of you are binging, just driving up my bandwidth bills all the time. It's all right. We don't mind it. Bring it. Of course, if you like what you hear, keep rating and reviewing out there. It really does help clearly. It clearly resonates with the new folks out there. So keep rating and reviewing for all the shows. If you like vol views, if you like the full network, whatever it is that floats your boat, if you like what you hear, keep rating and reviewing. It really does help the new folks discover the content out there. Of course, if you want to go above and beyond, discover more content on your own, like let's say maybe options oddities. You don't want your vol week and your trading week to end after vol views. You want it to continue. Well, then Options Oddities is there waiting for you. Also, every Tuesday, you get in a pro Q&A session with a great mind from the world of options and derivatives that you are free to pick at your convenience. And then, of course, live access to everything we do throughout the week, and even awesome, great giveaways. What more could you ask for? Theoptionsinsider.com/pro is the place to go to join us on that ever so fun journey to the dark side. Let's see who's joining us on today's journey to the vol dark side. First, we're going out to the Southern Volatility Mecca, where we are joined once again. I do believe he is still recovering from the epic palooza that was Volatility Views 500. You know him, you love him as the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the program. Have you finally managed to sleep off the hangover that is Vol Views 500, sir?
Well, everyone knows I like my Vol Views like I like my Levi's jeans, 501. And I am excited to be here. We've got a lot to parse. It's been a really interesting week, and I cannot wait to dig in.
Yeah, the Vol Gods are delivering this week. They're saying, we're not going to make your 501st episode be boring. It's going to be chock full of volatility goodness. And joining us in the MIAX hot seat, if the technology gods smile upon us, we have, to help us parse and kick off the 501st, kick off the march to Vol Views 1000, which is a terrifying thing to say out loud. But nonetheless, we are on it. Mr. Tom JARCK, the Vice President of Proprietary Product Development over there at MIAX. Mr. Tom, are you there, sir? Can you hear me?
I'm here. Can you hear me okay?
Success. We can hear you.
It works.
Yes.
Thank you.
All right.
Well, first of all, congrats on the 500th last week, and happy to be part of 501. And yes, as Mark said, quite the week to be back on the show and starting, the new count to 1,000. I guess is the next level of interest for your show. But excited to be on the show. Thank you very much, and we'll talk. Let's get to it.
All right, then let's get to it. It is time for the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the volatility review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down everything going on, and indeed that is trading and trending, and just lighten up our tapes from a vol perspective out here this week. And as you mentioned, a lot going on. As we're kicking off the show here today, the market's once again firmly in the red. That's pretty much been the primary direction since our last show, listeners. We've had a few days where they've tried to buck the trend. The bulls have come in, and we've had some whipsaw action, and we're selling off. And they drive us back all the way to almost unched, and then it sells off again. And we've seen that whipsaw action quite a bit this week, but net, at the end of the day, the net direction has been down ever since Powell and company really reaffirmed, hey, we're not playing around with this inflation thing. And that really seemed to remind a lot of folks that, they were kind of whistling past the graveyard for quite a while, driving this market way north of 4,000 when there were still a lot of headwinds against it out there. And Powell kind of came out and just really seemed to kick the legs out from under them. And we have been selling off hard ever since, blew through 4,000. And then for a while there this week, 3,900, everyone was drawing so much importance around the 3,900 level. If we broke through 3,900, that was it. Look out below. Well, I guess look out below now, because we are well below 3,900, below 38.5, actually, 38.50 coming into showtime, off 57 handles in the S&P, off about 1.5% out there, a little north of 1% in the Dow, almost 1.2%, and the NASDAQ closing in on nearly 2% to the dark side. So apparently it's look out below time, even though if you just rewind a week and change, this is pretty much back to pretty much where we were. So we had a whole bunch of Sturm and Drang signifying nothing out there. We rallied hard and we came off hard, and now we're kind of back to where we were. So intriguing stuff. Nonetheless, our vol friends looking a little bit frothier now than they were on Vol Views 500. Spikes a little bit north of 27, about 27.15 or so when we kicked off the show. It puts it up about exactly 4 handles from where it was this time last week. VIX cash was hanging out at about a 27.5 when we kicked off the show. That's up almost 6 points, about 5.7 points from where we were this time last week. VVIX, our vol friend, finally starting to threaten that triple-digit level. That level that we hung out at for, the better part of 2+ years throughout the pandemic. And now we are flirting with it. 96 when we kicked off the show, 94 now out there in VVIX. That puts it up a little, about 10 to 12 points, depending on where you're looking out there right now. Vol, also our friend, the Viking, a.k.a. V-Spikes, also looking frothier. 107 3/4 when we kicked off the show. That's up about 3.25 points from our last show. Still a long way to go to get back to the frothy levels we saw a year ago. It was north of 200 back in December of last year. So you got quite a ways to go, but it's also off the low that we have set out there recently as well. So intriguing stuff afoot. Let's go around the horn the opposite of the way we start. Let's start in the MIAX hot seat. Mr. Tom, what's lighting up your tape? And a little birdie tells me you're hanging out at a vol conference. What's the hot gossip over there in the vol conference this week, sir?
Yeah, the hot gossip. Yeah, so MIAX and Spikes, we were sponsors of the Global Volatility Summit this past Tuesday. Quite an interesting day to have a volatility summit where a lot of your vol PMs, vol investors, vol traders, we're all in a room and down at Chelsea Piers. It was a really good turnout. Generally a pretty pretty optimistic vibe in the vol terms, which is, not the greatest vibe in everything else. But yeah, it was great. It was, that's Capstone is the one that put that together, under the brainchild of Paul Britton. Like I said, I think it was the 13th annual event. Pretty well attended. I'll mention a couple of things that I picked up on in the room. Pretty much everybody was talking about, kind of the year of, vol underperformance. I personally like to compare it to like 2009, that first 6 months of that year where we had, equity markets would rally and vol would go up and vice versa. But, so that was a bigger thing. It was, highlighting the flatter skew. There was some highlights about, us being, with the market down on that, whoever prepared that segment had done it before the 4% sell-off on Tuesday. But, we're just talking about, some of the structured product worlds being, at that peak Vega zone where, the dealer community is long a lot of Vega. So, helps to dampen the volatility as the market goes down. They need to sell more Vega. There's talk about the new, a lot of new funds are out there and their strategies involve a lot of put spread collars, which is, another form of volatility supply. But in general, I think, the room, the vibe, I mean, most were pretty bearish equities, see inflation continuing, pretty bullish on vol overall, feeling like this new higher vol regime is going to last for quite some time. I mean, there's definitely people highlighting how we're in uncharted waters. A lot of the, trading community and investor community haven't really seen these kind of markets and, with this higher inflation numbers, higher rates, all this geopolitical, stuff going on. So, many in the room, foresee a, kind of a second leg down. I guess that's why they're in the vol business. But a lot of people, looking for that, next leg down and just feel like there's going to be that, liquidity evaporation. And, it's always, you leave these conferences sometimes feeling like you just want to just, liquidate everything and move to an island by yourself and hide. But, but overall, I mean, it was, like I said, very well attended. I can get into some more of the other, parts that I picked up on a little later in the show, maybe. But it's just and one thing I've observed personally is that it just seems like there's a lot more vol funds out there, vol traders, vol focus. I know a lot of my peers from my past, and as well as people that were in similar seats at bank trading desks have gone to the buy side, working at multi-strat hedge funds. So if you if you Google volatility funds, they're not going to pop up on that radar because they're part of a bigger fund. So there's a lot of people in the vol space, and it feels like there's a lot of consensus viewpoints. So that always makes me interested. That always catches my attention.
I've been to a lot of vol events over the years. We've done this show many times live from things like RMC and stuff over the years. Never been to a global volatility summit. What kind of crowd are we talking about here? Is it kind of like an RMC where they're bringing in, asset managers and advisors and trying to educate them on vol? And also there's people out there, funds, kind of presenting their research about their favorite new strategy, which seems to always involve selling puts somehow. Is that the kind of crowd? What kind of crowd are we talking about?
Yeah, I think it's it's definitely that kind of crowd. Yes, the whole I guess the brainchild when it was put together was to be a place where the investor community, those asset managers, pensions, endowments, could sit in an audience and listen to the vol managers discuss volatility. There was no pitches of a specific fund. There was no one pitching their funds. There was nothing like that. But it was just intelligent conversation, good panels. There was a best trade idea session, which I'm not allowed to repeat any of those, so I won't. But in general, there's always some good takeaways and some just getting everybody to think. And nobody came out with any reinvention of the wheel, other than us talking about spikes, of course.
Exactly. But, I expect nothing less from you, sir. Clearly, there's an opportunity now. SIBO has kind of moved out of the game a bit, at least domestically. I think they're doing the Reykjavik international event, but domestic vol, there is an opening out there. So folks jumping into the fray, glad to see it. Mr. Meatball, sir, obviously a lot going on out there from a vol perspective this week as well. what was lighting up your tape in a very whipsaw-y but net down kind of week, sir?
Yeah, I love those vol conferences when they're like, oh, yeah, I'm in vol capture. And then you look at what they do and you're like, no, you sell puts. There's a difference.
Yes, that's what 90% of them are doing.
I'm in vol capture. You sell puts.
98% of presentations at RMC ended with, oh, and I love to sell puts. And I'm like, okay, I get what you're coming from.
Yeah. No, and listen, I think that there is some, I'm not anti-selling puts. But I'd like to see more nuance around it and more use in the asset manager space to actually acquire names rather than just trying to, run line in the sand puts and collect 30 cents on a $30 stock. And then, you have a snap event and blow out the fund. So, we're down 56 points right now as we're talking. A lot of people are like, hey, why isn't the VIX? Why can't the VIX get off the mat? And I keep telling people, or spikes, both of them. And the answer is they're both already off the mat. The spikes as we're talking here is pricing itself 20. Oh, that's the settle. I want spike. Thank you. 27.19. Okay. Well, what does that translate to? Like 1.7% of movement every single day for the SPY. Last I checked, we've had one 4% day and then one ridiculously inside day to follow. And then a couple of days where we moved about 1%. Things are somewhat fairly priced. And, we continue to see the back end of the curve getting bid, and we see the just crazy upside open interest in all this vol complex. And so, until we get a event that nobody sees coming, maybe if this rail strike actually happens that people don't think is gonna happen, maybe that could do something. But it's a bit of a kind of vol quagmire out there.
Vol quagmire indeed. Let's dive heedlessly, some might say foolishly, into that quagmire. Now let's dive into the world of the futures first. We'll get into the VIX surface in a second. Mr. Tom, I know when you're not out there talking to us, you're always out there talking to the folks about all the different products, including, of course, all things VIX futures. Any new developments you want to tell us about in the land of Spikes futures this week, sir?
Well, Spikes futures, we had a great August. We averaged roughly almost 7,000 contracts in volume per day.
Oh, that's awesome.
What's that?
I said that is awesome.
Yeah, no, it's definitely awesome. Yeah, it was a big turn from the earlier in the year. It was kind of quieter, and so big pickup in August, and then total volume for the month was around 160,000 contracts. So we're pretty excited about that. As you know, the convection shares ETFs came live in August as well. So in conjunction with that, we were pretty happy, and that was a smooth launch for those ETFs. They're picking up a little bit trading, and then. We had this month. We had one day, in September already, where we traded over 12,000 contracts. So it was pretty significant. We're very, very excited about that, and a lot of interest. And we're, it's like I keep saying, we keep talking to a lot of people, and it's going to be, it's going to be, a big, big product. It already is, but it's going to become a bigger product.
Interesting stuff. Let's get on out to the land of VIX futures, that vol surface everyone's paying a lot of attention to. We've been saying for a while that contango out there, pretty aggressive, also pricing in perhaps some concerning action to come towards the end of the year, beginning of next year. But that front portion of the curve is where a lot of people are fixated these days. And coming into the start of the show, we saw that front portion looking a little bit frothier, a little bit juicier than it has in the past. Not quite backward, at least it wasn't when we kicked off the show, but it was getting close. We had the SEP future up nearly 4 points, about 3 3/4 points from where it was on the big episode 500, and the October future up a little over 2.5, about 2.6 points from where it was this time last week. So we're getting pretty frothy. We do kind of top out now around January, and then we kind of just hang out at I take it back. We top out in April of next year at about a 29.30 So everything north of January and beyond is north of 29 out there. So we are still looking at some fraud, some consternation in the longer term portion of the vol surface. Mr. Meatball, sir, what is catching your eye out there in the land of the vol surface?
Yeah, let's talk about the amount of open interest in months December, January, February, and March in the futures. There is, I don't know if you've noticed this, Mark, but does that open interest out there in those futures seem pretty darn big? And I'm wondering kind of whether on a similar scale, SPKEX is seeing the same thing. But there's a lot of open interest in longer dated futures, which is pretty unusual.
Yeah, everything about the long-term portion of the vol surface right now, I think, is a little bit unusual. It's certainly, people have been asking for a while, even when we were rallying, what are some of the things that make you have a little bit of pause about this market? And I would always point to, look at the second half, let's say, of the vol surface out there. That gives me a tremendous amount of pause about everything north of 4,000 I was not feeling, and that was one of the major reasons why. All right, Mr. Tom, I know you also watch the vol surface as well. Probably a lot of talk about it, I would think, this week at that vol conference there. What was lighting up your tape out there in the land of the vol futures, sir?
Yeah, if that conference had happened probably a week earlier, there would have been a lot of, it's one of those deals where, all right, we're down 4.5%. Is it too late to do any of these trades? But anyway, one thing that was interesting that was a lot of talk about, one of the biggest concerns out there, it seems like, is just, obviously energy inflation, food inflation prices, a lot of talk about, potential social unrest in Europe because of these factors. And then you factor in the Russia-Ukraine thing, and there was some interesting comments were made. There was a general there who's a keynote speaker. He was a former Secretary of Defense, General James Mattis, 4-star general. But he was, we're just talking about just the different dynamics about, the European situation right now and the war in Russia and Ukraine. And one of the things that came up was that if you think, if Europe can make it through can get through the winter with current stockpiles, energy, as it exists today, and we don't have any extreme cold temperatures. It's kind of interesting that next spring, when when all is said and done, that and I'm not a political, I'm not a military analyst, but what kind of came down is like, well, if you think about it, it's very true. Like Putin at that point he's kind of got nothing left, right? So what's he going to do at that point? Is he going to concede and just go back about his merry way, or is he going to become more of a little bit more rogue than he already is? So that was an interesting one. So if you think about longer term futures and you think about the term structure, maybe it makes sense to be bidding up that long end as well. So on the back of that.
Anytime you have a 4-star general speaking, you're going to want to maybe put on some puts in your back pocket. Or there's nothing. Very, very rarely do you have a rosy, optimistic outlook coming out of that.
Yeah, he was just pointing out both sides of it. Just don't not necessarily that the getting through the winter is not necessarily a positive thing. It is a positive thing, but it could be a negative thing. So. But it was really interesting.
You don't bring the 4-star general to talk up the market usually, but good stuff nonetheless. Let's get on out to the land of the vol options out there. Mr. Tom, I'm glad you're here because I have a question for you. And when I relate the top 10 positions in SPKEX options, you may probably assume what my question is going to be, but let's do it. Let's start from the bottom here. Number 10, we have the OCK24 calls, so a reasonable strike. Number 9, we got the OCK21 calls. Number 8, we've got the OCK13 half, so we're looking pretty normal so far. And then we go to number 7, the SEP 180 puts. Then number 6, the SEP 170 puts. Then number 5, the SEP 160 puts. Then number 4, the SEP 110 puts. Then we go to number 3. We go back to some normalcy, the SEP 12 half calls. Number 2, the OCK 11s. And number 1 out there in SPKEX options are the SEP 28 calls. Tom, I think you know what I'm going to ask you. These have been trading for a while, back and forth. A lot of these straight up or just deep in the money put spreads. I put it to Matt. He was a little bit bewildered, so I'm going to put it to you as well. What is up with these deep in the money puts and put spreads and spikes? What is going on, sir?
Yeah, I don't really know what's going on, to be honest. But, I looked at them. I've looked back at when I've seen some of those trade, and I went back and, I backed into where, the synthetic future would be to see if something was out of line. I thought maybe, there was maybe someone's, whatever, their pricing system was stale and they weren't, saying a good quote and someone took the other side. but I didn't see that. I saw them trading at reasonable levels. So I'm not sure if maybe someone might be positioning in the options that doesn't have access to futures. Keep in mind if there's a lot of options traders, especially in the retail space, that don't have access to futures in any product. So they might be doing deep in the money, puts or calls to get different, 100 delta exposure. But beyond that, I can't really dig into too much more on that. But that's, I did check a couple of the trades that I saw and the pricing that looked in line. Like, they were trading pretty much in line where the futures were. So it was not it wasn't like a system glitch from somebody. So I was happy to see that. But no real color. It's an interesting one.
I did a similar cursory analysis when I saw that too, because I thought the same thing. Maybe something was out of line, or maybe someone trying to, take advantage of a synthetic out there. And I didn't see anything either. And why would you put up a 10-point wide put spread so far in the money? I've been doing this vol thing for a while. I've yet to see stuff like this, yet alone for size, like we're seeing it in spikes. But c'est la vie, that's what we're getting out there. So intriguing stuff. So I love it. If you're the person or people out there putting up these in the money put spreads over there in spikes land, hit us up. Let us know. I want to know your rationale for why you are going about it in such an apparently laborious fashion. But hey, intriguing stuff. There's room for everything in the vol space, and including this. Let's get out to the land of VIX options, because they are putting up some numbers today. And it's been a while since I've been able to say that, quite frankly. It's kind of been quiet times out here in the land of VIX options, as reflected by the fact that how long have I been saying, listeners, that the ADV was trending in the wrong direction. It was going to break 400K. Well, it did. Right after episode 500, it broke 400K. Coming into today's show, the ADV in VIX options, 387,000 contracts. Down another 14,000 from where it was this time last week. It's probably going to change after today, though, because there's some paper going up today. As of start of this segment, over 500,000, 524,000 contracts on the tape out there in VIX land. We'll get to all that paper in a little bit. First, let's break down the top 10 positions. Notice you will not find the deep in the money puts on this side for whatever reason. It hasn't matriculated its way over here to VIX yet, but intriguing stuff. Nonetheless, cost you 141,000 contracts to break into the top 10 here. This gets you to the D70s, number 9, 141,000 as well, of the SEP 30s. And then we go up again, 145,000 for number 8 of the SEP 75s. Number 7, $1.56 of the SEP 50s. Things are interesting when the SEP 50s look reasonable by comparison. Number 6, we got $1.59 of the NOV 80s. Those are still hanging around for size. Number 5, we get actually some puts back in here again. 183,000 of the OC 20 puts. By the way, it is 9-1 calls over puts in the top 10 right now. So the first and only put, the OC 20s. Number 4, 199,000 of the OC 50s. Back to the 50 strike, listeners. Then it's all up from there. Number 3, 200,000, pretty much exactly of the March 75s. Numero 2, 205,000 of the OC 75s. And number 1, with a pretty decent sized bullet today, 230,000 of the NOV 70s out there. Speaking of today, let's see what folks are slinging out there. Then we'll get the meatballs color. I'm sure he's been checking out a lot of trades in this whipsaw-y kind of week. And that's the kind of days that usually generate some ball paper, listeners. Straight down days like today tend to do it, but also whipsaw-y kind of days tend to do it too. And we saw a few of those this week. Today, like I said, over 500,000 contracts on the tape already. The big print out there today, almost 33,000 of the OC 23 puts. Looks like they're selling the heck out of those. And then number 2, 27,000 of the SEP 30s. Number 3, 22,000 of the SEP 26 puts. Number 4, almost 19,000 of the OC 30s. And you got to have some optimistic calls in the top 5. Today, it's about 19,000 of the OC doubles, the OC 55s, listeners. Yesterday, for all the whipsaw-y action we saw out there, it was kind of anemic. So it was one of the few whipsaw-y days that didn't really translate into a lot of paper. Like only 274,000 contracts on the tape yesterday. This is why the ADV has been trending lower, listeners. The big print, 16,500 of the SEP 25 puts, followed by 12,000 for number 2, SEP 27 calls. Number 3, 12,000 as well of the OC 35s. Number 4, 11,700 of the SEP 30s, and rounding out the top 5 on a pretty quiet day, 10,000 of the OC 21 puts. Back to Wednesday, a little bit more paper on the tape, threatening 600,000 contracts, 590,000 to be precise. And the big dog on Wednesday, 100,000 pretty much exactly of the May 90s are going out to May now, listeners. So they have extended their upside action all the way out to May. Again, that's talking about that longer term portion of that curve. Number 2, we fall off a cliff to 36,000 for the SEP 25 puts. Number 3, 26,000 of the SEP 30 calls. Number 4, 22,000 of the SEP 29s, and rounding out the top 5 on a pretty active Wednesday, 20,600 of the SEP 20 calls. Tuesday, also north of 500,000, 540,000 contracts on the tape. No six-figure prints, though. Instead, 35,000 was the biggest. That was the SEP 24 puts, followed by 19,000 of the SEP 35s. Number 3, 19,000 as well of the SEP 25s. Number 4, 19,000 as well of the SEP 30s. Looks like maybe a bit of a spread there. And number 5, I should say, we have the SEP 27 calls bring up the rear at 17,000. Monday, kind of split in the uprights, not quite as weak as yesterday, but not quite as robust as today or Wednesday. 370,000 contracts on the tape. The big dog on Monday, almost 21,000 of the SEP 24 puts. Number 2, about 16,000 of the SEP 28 puts. Number 3, 14,000 of the OCT 30s. Number 4, 13,000 of the DEES 29 calls. And rounding out the top 5 on a decently active Monday, 12,000 of the September 22 puts. Mr. Meatball, a lot of back and forth in the vol space this week, a lot of back and forth in the major indices, a lot of interesting paper lighting up our tape out here, including the May 90s. What was lighting up your tape out here this week, sir?
Yeah, that May 90 ratio spread was massive. And, I was looking at this, and the amount of open interest on those upside calls is absolutely astounding. Calls that are 70 and higher, we've got over 1 million contracts open, which is just astounding when you think about what we would need to get there and what the payoff is on those. And that, that's part of the reason why I think another reason why things are so muted is that vol is just, there's a lot of upside protection up there. And so traders aren't, they're not gun shy as we sell off. They're not chasing volatility. And that's another reason why maybe vol's behaving the way it's behaving.
Yeah, intriguing stuff afoot. This has been a drumbeat for us on the show now for quite some time. The just amazing amount of open interest on these, shall we say, far northern strikes in VIX land. It just continues to grow. May 90s, the latest addition to the size upside going on out there. So fascinating stuff out there. Mr. Tom, I know you watched the VIX options out there as well. What's been catching your eye out there this week, sir?
Yeah, I guess what kind of caught my eye was just that, I get some of the flows every now and then from some folks. And I saw that, I've been trading the vol space for a long time. We always had a lot of cash spreads and strips trading and big spreads trading in the, in SPKX and spiders and all these other products. But I just feel like I'm seeing more and more like just big package spreads in VIX where, it's, there's, I think there was even today, there was a big strip that traded. Where someone might be trying to do some replicating some type of variance or I will call it simple variance on VIX itself. Similar to the mechanics that we have on VSPKES, whether you would sell a strip of equivalent equal weighted strikes basically. So I'm seeing just more and more activity as far as cash spread pricing and just bigger just multi-legged spreads, and I just thought it was an interesting observation. I was going to say, I think today's was like a SEP strip, I believe. It was like a 25, 26, 27, 28 puts, versus the with the 29, 30, 32 and a half, 35 calls, stuff like that. I'm just seeing more and more of that.
We're also seeing more action out there in the land of the vol ETPs, including our newest additions. And Tom, maybe you can help us come up with a name for SPKX. Because we got spiky for the 1.5 flavor. SPKX doesn't really roll off the tongue. SPKX doesn't really roll off the tongue. So maybe we need your help on the branding front out there. But coming into Showtime, we have, of course, the plain vanilla, the 1-to-1 SPKX at about a 28.60. That was up almost 3 points, about 2.7 points. Then we have our levered friend, good old Spiky, at a little north of 30, about 30.20. That's up nearly 5 points on the week. Mr. Tom, I know when you're not looking at the futures and the options, you spend a lot of time watching these new ETPs. What's lighting up your tape out there this week, sir?
Well, just I noticed that today there's some decent volume on the SPKY, which is the 1.5 times the short-term futures index. That was so we're seeing look, we had a successful launch, and we're looking at, the volume is going to build incrementally. It's not going to happen overnight. And so we're generally pretty pleased with the just seeing some activity out there, and especially today because there's some pickup. Quite frankly, we haven't really been out there, really pounding the street with the product. So it's just a lot of folks, a lot of people learned about it this week per se. It's been good, and I will say I think we can expect to see some options on these ETFs possibly next week, but at some point in the near future, but it could be as early as next week.
Really?
Been pretty exciting.
By next show, we could be parsing some spiky and SPKX options. You got to help me with the other name, Tom. It's killing me.
Yeah, I think. Well, I kind of like the spiky. So,
spiky is great. Spiky rolls off the tongue.
It's really, it's really spikes. That's
I know, but spikes is taken, so we can't have two spikes. That is very confusing. So there's Spikes X.
I'll go back to the drawing board. I'll get the. We'll start thinking.
There we go. Have the branding geniuses over there help me out with that one because I'm struggling.
Yeah,
Spikes
X.
We're
excited because this, with the options on the ETFs, that'll complete, the full what I would consider the ecosystem on the product on the Spikes world.
Mr. Meatball, we got the Viking. We've got Spiky. I know you got a one lot of one of them out here. Help me out. What are we doing with Spike X, sir?
Didn't I have a good name for it? What was it?
You thought it was good. I was not overly enthused. I forgot what it was. That's how good it was.
It was
the Sparks, maybe? The Sparks? SPKX? Sparks? It's not bad.
Sparks.
I don't hate it. I don't hate it as much as whatever you suggested a couple weeks ago.
Yeah, I don't remember either. Sparkle? We call Sparkle?
Oh, the Sparkle? Sparkle and Spiky? I don't know.
It's got pizzazz, spiky sparkle.
We're workshopping it. Listeners, help us out. Clearly, our creative branding does not extend to SPKX. So help us out. Give us a fun moniker along the lines of the Viking and Spiky. That is something that is memorable for a good old SPKX. As we keep on rolling. I don't know what's memorable about SVIX outside of the fact that it's inverse. Taking a bit of a pounding, obviously, today. It was down about 1.5 points when we kicked off the show at about an 1170. Let's see where it's hanging out right now. It's still at about 1170 right now, so it hasn't really changed. Not a lot of paper on the tape, so that really hasn't changed much either, even though the ADV has ticked up about 300 contracts. So, it may not sound like much, but when the ADV is 600, it's a pretty decent clip, actually. It's still sub 1,000, so we're not going to spend a ton of time on it. SVIX, for all the headlines it drew out there when it was launching, this is a disaster for the markets. It does seem like good old UVIX is where folks are hanging out these days. And again, that's reflected again today. UVIX coming into the start of the show was at about 1120, and it's still at about 1120 out there. So neither of them really moving much during the first half of the show here, even though paper-wise, UVIX back on a tier. Fridays, it seems to like Fridays out there in UVIX. They put up some numbers out there. 7,400 contracts on the tape. That's already north of the ADV, which is 6753. That's up another 250 from this time last week. So the ADV continues to move in the right direction. And every Friday when we do the show, they have these big spurts of paper out there. We'll get to what's trading out there in UVIX in a second. First, let's break down really quickly what the top positions are. Let's just do a top 5 out there in UVIX land because it's still not bringing those kind of numbers. Number 5, about 1,700 of the SEP 13 calls. Number 4, 2,000 of the DEES 18 puts all the way out to DEES. Number 3, 2,200 of the SEP 11s. Number 2, 2,900 of the SEP 12s. And rounding out the top 5 in UVIX, 3,300. That's a lot for UVIX. 3,300 of the OC 12 calls, listener. So interesting stuff. In terms of what's lighting up the tape out there on a pretty active day out there, the most active contract today, the SEP 12s doing 1,500. Again, obviously, expiration time, so that makes a lot of sense why this stuff's going up today. 1,100 for number 2 of the SEP 11s. Number 3, about 500 of the 11 halves. Number 4, about 500 as well of the SEP 11s. And rounding out the top 5 today, a paltry 300 of the October 12s. Mr. Meatball, I know you've been keeping an eye on SVIX and UVIX, more UVIX. What's lighting up your tape out there in our inverse and levered friends this week, sir?
Yeah, they're moving. UVIX has done exactly what it was supposed to do. It's been highly volatile. I had a nice little home run trade in UVIX early in the week. I bought some, ahead of the Fed, I bought some 9 calls for 50 cents. Those paid off. And I think that, we're in a spot where volatility is wild, which is going to be good for a product like this or spiky, or UVXY for that matter.
Has UVIX started to eclipse your UVXY trading, sir?
Yeah. I basically don't even use UVXY anymore. Why would I? Why would I when I've got spiky or I've got UVIX? So, if I'm trading 1.5, I'm supporting the spiky. And if I'm trading 2, I want to trade, if I really want that true upside vol exposure, I'm going to trade UVIX.
Spiky coming with the options maybe as soon as next show, so we could have some options to parse on everyone's beloved spiky out there. Let's get on out to the name that is less beloved these days, at least by the meatball. But look, judging by the ADV, seems like a lot of you are starting to feel that way as well. This is good old UVXY getting a lift today, about a 1090 when we kicked off the show. Still right around there as well, up about 1.65 points from where it was this time last week. Of course, the question so many of you have been asking is about the reverse split. Not, I think, in the cards today. Certainly not north of a 10 handle, listeners. When the market's giving it to you, you don't need to manufacture that reverse split. The market's already doing it for you out there. The ADV is at about 280,000. It's up a whopping 2,000 from this time last week. So not a huge evolution there. It seems like UVXY has kind of bottomed out. And as people continue to migrate into UVIX, that may indeed steal some of its thunder. Let's do a quick top 5 out here as well, because we know still a few of you are out there playing out there. Number 5, 18,000 of the SEP 10 halves. Number 4, 18,000 as well of the SEP 10 puts. Number 3, 19,000, almost 20,000 of the SEP 12s. Numero 2, 20K of the SEP 11s. And rounding out the top 5 here in UVXY, 20,000 as well of the SEP 10s. By the way, if you're wondering, it is 70-30 calls over puts in the top 10 out here in UVXY. So still, for a product that wants to race headlong to zero every given day, still more calls than puts out there in the OI, which is always interesting. Interesting as well has been the earnings vol space over this past cycle. If you haven't been paying attention, you need to go check out the numbers. Luckily for you, we did a whole show about it this week on the network. It's called The Advisor's Option. We brought in Mr. Matt, the keeper of all this ORATS data that we give to you folks so generously for free over there, theoptionsinsider.com. And if you check out those numbers for yourself, you'll see we're looking at pretty much the most robust season, pretty much since we started generating these numbers, certainly since the onset of the pandemic. The average in this post-pandemic era for a cycle is 86%. That means if you took the average of all the straddles out there and everything moved exactly in line with their straddle, that would be 100%. Nothing's been coming close to that. It's been 86%. This cycle, we were at 115%. That's the average for all the weeks, all the straddles, everything that we track, all the thousands of names out there, just for you folks don't have to. And so, yeah, very optimistic, very aggressive week. The big week was week 4, nearly 140%. That's the most outperformance I think we've seen since we've been running these numbers. So crazy stuff afoot out there. You owe it to yourself to check it out. Also, check out the earnings trades reports. We're tracking a bunch of earnings-related trades that might interest you, including long straddles, about 100 of those, and about 70 long calendars. I took off the short calendars. That seemed to really blow people's minds. We're not tracking those in the report for you anymore. But intriguing stuff nonetheless over there. Check them out over there, theoptionsinsider.com. Click on the Options News and Articles tab to enjoy a bevy of free volatility reports whenever you want. Meanwhile, it's time for us to enjoy some of your questions and comments. It is time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. You guys send us questions. We often turn the spotlight back on you as well. You guys know last week we asked you about your favorite red flag indicators, and nearly 50%, 45.7% chose the inverted yield curve. 23.9% chose the backward VIX curve. I thought that might take it, given our audience, certainly for the audience of this program. But alas, it was number 2. Number 3, the death cross pattern, 21.7%. And other bring up the rear, nearly 9%. A lot of you writing in for VWAP there. So intriguing stuff there. This week, we're asking you, we've seen an explosion of new options traders in recent years. That brings us back to the age-old question. When did you start trading options? Gave you 3 choices, actually 4 choices. We wanted to have more. We wanted to have a 5th, a super old school option, but alas, no room in the cards for that. And this is kind of a retread of a question we asked about 6 to 8 months ago. And we were kind of surprised at the results. And so we thought we would repeat it again because so many of you were coming in hot and heavy, which is why we focused on the just started this year in the pandemic era. We kind of carved them out separately just for that reason. So we gave you 4 choices. When did you start trading options? You just started this year, so you're fresh to the market in 2022. You're a pandemic rush options baby, so sometime in the 2020 to 2021 range. You're a post-great financial crisis options baby, so sometime between 2009 and 2019. Or you're quote-unquote old school. And for the purposes of this poll, that's before 2009. I think most of us here would be like, 2009, you're still an options baby, but hey, I digress. There's no room for a super old school. Tom, we'll go to you first, sir. What is your vote for what the audience is voting for? When did they start trading options, Tom?
I'm going to say, I feel like the 2009-19 period would be, it's a wider time series, so I feel like I'm safe with that guess.
There are more data points to choose from there. Yes, that is true. We did that for a reason because we know folks are piling in, but I could certainly see your logic of why you might want to go with that one. Mr. Meatball, same question for you, sir. What are you feeling? When did our audience start? What kind of options babies are they?
Oh, they're recent. They're mostly recent babies. We've got a good group that's been around a long time, but I think most of the audience is relatively new. And then not old school, like going back to the aughts like you and I do. Although you go back to the 90s, right? You're a little older than me.
I do go back to the 90s. I'm hardcore, baby. I'm not quite rock lobster hardcore, but I do go back to the fun days, the last century, babe. I've been doing this for over a century. Deal with that. All right. Let's get out here and see what you folks have been up to out here. And yes, the largest data set, 2009 to 2019, is winning, but it is starting to lose its lead. 37.3% of you said you started in that time frame. Then we have an exact tie, which is also weird. 29.4% each for old school, pre-2009, and also the pandemic rush period. That's very interesting. And then bringing up the rear, I thought this would get more love, which kind of surprised me. 3.9% saying you just started this year. But still, you add them up, you're about a third of the audience, yet again, has started trading options just since the start of the pandemic, which does pretty much jive with the numbers we're seeing in the industry and the numbers we're seeing on the network. A lot of new folks coming in out there. Don't be embarrassed to choose just started this year. If you started this year, hey, have at it. We don't, we have a listener writing in saying after his mom gave him cigarettes at the age of 12. That was not an official option, nor was that a write-in, but funny. Let's hope you're joking out there. Let's go to, let's actually go to this one because Tom's on the show with us. Let's go to this one. That's a good one for you, Tom. This comes from Mac10. Mac10 wants to know, why can't I find quotes for SPKY, SPKX, and good old spikes, original spikes in what he puts regular outlets like Google or Yahoo Finance? Do I need to look in special places for those quotes? I just discovered the show and I'm learning a ton. Well, welcome to the crowd. You're clearly one of our illustrious third that has started probably trading options in the last few years out here in Mac 10. Tom, we have to say for our listener here who's having a hard time finding the quotes and what he puts the general or regular outlets.
Well, I guess I would say, VSpike should be available over, that's disseminated through an opera feed. So that's pretty much available, to everybody that picks it up. So it might be a matter of needing to wake those platforms up. I'm going to take a look. I didn't realize I should have, I didn't see the question earlier. I could have looked into it, but yeah, I'll look into this, but they should be available. They're traded on, all the, they're on your NYSE ARCA where the ETFs are launched from, but they're trading on multiple, trading platforms. So they should be available. But yeah, that's an interesting one. I'll look into it. Hopefully I can turn those on. if they're not working.
And sometimes some of these, other, as you put, some regular platforms, takes a while for things to propagate out there. I just checked on a bunch of different brokerage platforms, and you can find it on all those. So certainly if you're in a brokerage or trading platform, you should be able to find it. A Mac 10. I haven't done the scan of the quote unquote regular outlets, the Google Finances, the Yahoos, to see if it's percolating out there yet. But definitely check your broker. Simon's site T3 Index, also a good site for most of them. You're not going to find SPKY and SPKX there, or Sparks. You can find those on convexityshares.com. I think they mostly disseminate the NAV. You got to dig a little bit to find the actual trading price, but you can find it there as well. Let's go. This is a good one. We were just talking about this, Mr. Meatball. This comes from B. Pence. He wants to know, is it still worth playing in UVIX right now? I think he means UVXY. He wrote UVIX. I think he means UVXY. Is it still worth playing in UVXY right now, or should I wait for the reverse split to dive back in? What do you have to say for him, sir?
No, it's still worth it to play it. And you've got Spiky now that you can play, and you've got UVIX that you can play. So there's all sorts of different ways of approaching trading vol using ETPs right now. This is like we're in like the ETP golden age right now, because I refuse to call the XIV era the golden age of ETPs. There's tons of opportunity to trade these things right now.
Well, that was the golden era. Then it died pretty spectacularly, and has now been reborn.
Got to the woodshed and shot with a double-barreled 12 gauge.
So let's hope that wasn't the golden era. As we keep on rolling, you know what it's a golden time for, though? It's a time for us to once again throw ourselves heedlessly, some might say recklessly, into the vol future for your entertainment and enjoyment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, let's do it. Let's predict the future, see what the vol gods have in store for us. I haven't seen a ton of evolution on the vol side over the course of the show, which is somewhat unusual. Usually these days, there's a lot of whipsaw action. I've often joked, if you don't like where vol is, just wait 5 minutes. These days, you had to wait a whole hour and not a heck of a lot of evolution. Spikes was at about a 27.15 when we kicked off the show. It's at a 26.98 right now, so it hasn't really done a heck of a lot of living. VIX cash 27.5 when we kicked off the show, about a 27.30 odd or so right now. So a long way around to saying I don't see anyone with anything north of a 25 handle in our prognostications, either from us on the big 500th episode spectacular or from the listeners. The closest was me at a 24.65. It's no secret I've been feeling more vol out here, listeners. Clearly, I was not feeling enough vol. I needed a 26 handle at the very least to be in contention, and really I really needed a 27 and change handle to be within our 10th of a point margin of victory. Alas, I was not. 24.65. So I was about 2.3 handles away on spikes and about 2.6 away on good old VIX. Mr. Meatball going palindromic again, 22-22. No joy there. The Rock Lobster following suit, 21-12. A great Rush album, not a great vol pick this week. That one's out. And Mr. Rhodes was feeling no vol. He was feeling 20-02. And alas, that is not correct. I won't go through the litany of listeners' prognostications here. Suffice it to say, no winners. That means Tom, as the person who did not lose last week, you get the dubious honor of commencing us this week, sir. What are you feeling for vol this time next week?
Awesome. I get to be the leader. Let's see here. I feel like we've had a few ups. I'm gonna go with a 25.03.
25.03. So you're going to give some of that vol back, but still pretty frothy, especially compared to where we were about a week ago. I'm feeling something not entirely dissimilar from what you're putting down here. I'm still feeling frothier compared to last week, but perhaps not quite as juicy. As you were talking, I was thinking in my head, and it kept popping out to me, 26.35. So about a point lower than where we are in VIX, and a little less than that out there in Spikes land, as vol looks like ticking up a little bit right now. So we shall see. We're a little bit frothier. I'm going to guess Mr. Meatball going to go for, I don't know, a 23-32. What are you feeling next week, sir?
I was gonna say 23-32 actually. So, but now
I've ruined
after
it for
that,
you.
I gotta say 24-42.
Oh, okay. Oh, 24-42. All right. So the palindromic guess for the Meatball this week, listeners, 24-42. There's your market. You got Meatball at the dark side, Tom playing Goldilocks, and me on the upside. I'm feeling that one, listeners. I think you want to lean that way if you got to pick one of these, as we unfortunately draw to a close. There we go. All right. Unfortunately, that music means we have concluded our broadcast week for all of you on-demand folks. Thank you for joining us here. Of course, if you want your broadcast week to continue, you want to join us for Options Oddities in a little bit, just head on over to theoptionsinsider.com/pro and get some of that dark side goodness on. A lot of fun stuff to break down in Options Oddities coming up in a little bit after this show. But before we go, let's go around the horn. Mr. Tom, you guys are always cooking up cool new things in the land of vol. If folks want to check it out for themselves, where should they go? What should they do?
You can go to MIAXoptions.com/spikes for information on spikes, and then convexityshares.com for information on the ETFs. Thank you.
Mr. Meatball, our chat is debating the Pack versus the Bears this weekend. It's like we got some Packers fans in there, so might have to root them out. But what are your thoughts on that, and what are your thoughts for where should folks go if they want to learn more about all things Pitt, sir?
Go Bears, and go to options.com. I'm writing stuff on VIX volatility every single day. You're going to want to be there. Optionpit.com to see everything that we're doing and read all of our blogs.
One of our listeners, obviously a Packers fan, says his guess is whatever the score is versus the Bears. So if it's 28-14, his guess is 28-14. All right, I see what you're putting down there. We'll see. That might be a little contentious with a lot of our audience out there, but we won't get into that dogmatic schism here today. Instead, we'll just say thanks for listening. Stay safe out there, and we'll see you back here next week, another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIKES Volatility products. SPIKES options and futures are traded on the SPIKES Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.